I made a big mistake in industrial real estate. Before I begin with the story, I fully realize that talking about losing money is probably the opposite of most videos on YouTube. We've all watched videos of someone who keeps hitting investments out of the park, and coincidentally, they probably have a course to sell you on how to do it too. But I'm not trying to sell anything, so instead of making it seem like there's a rainbow at the end of every investment, I think it could be helpful to also talk about the investments that don't work out as planned. So I'm going to share with you what that mistake was, but also how it helps shape how I look at each and every property I look at, whether it's through the lens of an investor or as a broker on behalf of a client. My hope is that this will help you look more critically at the process of investing in industrial real estate and perhaps avoid making a similar mistake yourself. So let's jump into it. This story goes back to 2016 when my business partner and I bought our second industrial property. It was a new industrial condo unit that was completely undeveloped. Prior to us purchasing it, the owner at the time leased it to a company that also happened to own the neighboring unit. They had previously purchased that neighboring unit for their own needs and they needed to expand. However, they weren't in a financial position to purchase an additional unit, so they entered into a 5-year lease. The owner of that unit still wanted to sell, so we bought it off him shortly after the lease was signed. Our thought process was that the tenant would be a natural buyer at some point down the road when they were in a better financial position, so we could still earn some rental income and pay down the mortgage until that time came. We put down roughly 30% as a down payment, which allowed us to have a decent positive cash flow right from the beginning. So far, so good, right? Well, let me tell you a little bit more about the tenant. They were a seafood distributor, and the intent with the unit was to use it exclusively as storage. Shortly after we bought it, they asked us if they could install a large commercial-grade cooler. They prepared plans and had a qualified contractor all lined up to do it, all at their own cost. Again, it seemed like this would reinforce their decision to eventually buy it from us down the road. The next few years of ownership went exactly as planned. We paid down a portion of our mortgage and slowly built up our cash position. Our lease agreement stated that they had to let us know about their intentions to renew the lease 6 months prior to the lease expiration, so we reached out to them to start the conversation a few months before that deadline. Our intention was to approach them about either renewing the lease for a new 5-year term or purchasing the unit from us. But we got no response. So we tried again and again, still no response. Before we knew it, the option to renew period had actually lapsed, so we were left in an awkward spot. We couldn't get a hold of the tenant, and all that was in the space was one giant cooler. No office build-out, not even a washroom. We decided to put the unit up for sale and for lease, and fortunately we still had a few post-dated checks from the tenant for the last couple months of their lease. But with the end of their term quickly approaching, we were struggling to find a buyer or a tenant. The space in its current form was only suitable for companies needing cold storage space, and we were not finding compatible users. Nor were any companies showing interest in significantly renovating it. And another plot twist, we found out that the tenant had actually leased a larger space in another building. So we were holding out hope that since they owned the neighboring bay, that they would see the value in this unit as well, but this news seemed to extinguish that hope. Our dilemma now was that we could face a sizable cost to retrofit this unit for a new tenant, or that any buyer would factor in these same costs when determining a price. As a Hail Mary, we left another message for our tenant and asked him if there was a price that would make sense for them to purchase. A week or so later, they got back to us and said they'd be interested at a dramatically lower price. We weighed all of our options, and after a bit of back and forth, we settled on a price that was about 15% lower than what we had bought it for 5 years earlier. Now, this was a small unit, so losing money on it wasn't the end of the world, but nobody buys real estate to sell it at a loss down the road. Fortunately, we cash flowed throughout the duration we owned it, and we also paid down a chunk of the mortgage, so it wasn't as bad as it could have been. But this experience taught me a very powerful lesson. That lesson is to always ensure that the property will either be leasable or sellable down the road. It is imperative to be prepared for the possibility of the current tenant leaving at some point in the future. They might not renew their lease, or they could go bankrupt, or any number of factors could put them in a position where they can't afford their rent. So all of the financial analysis you conduct at the beginning could prove to be quite inaccurate if you're stuck with a property that you struggle to release or sell. That's why I tell new investors that industrial real estate should scare them. Having a healthy amount of fear going into the process will help investors be that much more critical in looking at all the strengths and weaknesses of the property, and then valuing the opportunity accordingly. I can't stress this enough. Even if there is a tenant, think about the building as if it were vacant. Naturally, you'll still do the regular financial analysis, but if the building is fairly standard and doesn't have any major limitations, there'll be less of a concern than a building which isn't competitive with the rest of the market. The mistake we made is that we assumed the current tenant would either stay indefinitely or purchase it from us. Had we done the exercise of comparing that unit to other units in the market, it would have been clear that the unique build-out would have affected the future leasability or saleability. We went into that investment bright-eyed and bushy-tailed, but reflecting back on it, if we had a bit of fear, we could have factored in that worst-case scenario. Perhaps we still would have accepted that risk, but at the very least we would have been prepared for it. Thinking about all the things that can go wrong might seem like the very definition of pessimism, but don't let this fear stand in the way of a good opportunity. I strongly believe that industrial real estate can be an amazing investment vehicle, provided you're well educated on the topic. I've devoted my channel to helping you learn more about industrial real estate, and I'll be talking about this extensively in future videos. So please consider subscribing if you want to learn more, and if you want to jump into it further right now, check out this video right here. Thanks for watching, catch you in the next video. It seemed like this would reinforce their decision. That's why I tell new investors that industrial real estate, real estate.